This episode is sponsored by Exactuals, perfecting insurance payments and the data driving them. How about you tell us a little bit about what is NINTEY?
Sure. NINTEY, we are innovation experts for the insurance sector. So we combine a deep practice and expertise in the art of innovation with a passion and a real focus on the insurance world. And so we're helping carriers and reinsurers around the world to crack innovation challenges in two areas. The first is taking new insurance ideas to market, which we do in 60 days. So the acceleration of real ideas. And so we deal a lot in ideas in insurance. And the second thing we do is to help them become better at innovating. So training, operating model design, innovation funding, setting up innovation functions, that kind of thing. Those are the two things we do. We've been honored to be voted by the sector as Consultancy of the Year for the last 2 years running, working for most of the large carriers across Europe, many in North America, and increasingly doing stuff in Asia Pacific. And we're a business with a little bit of a difference in as much as, yes, we're a for-profit business, but we're also very much a for-purpose business. And the reason for our name 90 is that we give 90% of all the profit we make away to charitable causes. We love the insurance industry because it helps take the risk or help deal with the risk in day-to-day life for humanity and for businesses. And 90% of our profits we give back into causes that are primarily working in developing countries to help alleviate some of the risk challenges that the poorest of the poor face. So things around healthcare and education and access to funding for micro businesses, that kind of stuff. So that's us as a business.
Yeah, no, sorry for interrupting you. I always consider insurance as the safety rope or the safety net that enables entrepreneurs to take that step, to jump, off the cliff and start climbing or whatever that may be. Because when we think about the history of it, it started for the merchants. And I'm not just talking about Lloyd's, I'm talking about pre-Lloyd's. Venice was the famous when, all the merchants went and started, to do their voyage beyond the horizon. And that safety net for the entrepreneurs or for the economy, it's something that we feel, and until today, although today it became a little bit more and more complex, thoughtful. And you guys doing a lot of work of helping the insurance companies, mainly the incumbents, of taking that step forward. What exactly is the definition of innovation?
So it varies. There is no single definition of innovation. How I describe it is a change, no matter how big, that is executed at scale, not just an idea, and that makes a positive difference either for the business or its customers or its staff. So it's something new, it's something that has been commercialized, something that makes a positive difference for one of those three stakeholder groups. So it can be a tiny little change, So the cleaner in your kitchenette changes the way in which they stack the coffee cups. Okay, that's tiny, but I would say that's a tiny innovation. And at the big end of the spectrum, it's the kind of major innovations that we know and love and that we talk about at conferences. Shall I tell you about my favorite innovation from 2020?
Please do, of course.
Yeah, I love this one. So this is one we had the honor to be part of helping to get the early stages underway. But we were approached by AXA XL on the commercial P&C side of things out of their Lloyd's or London-based office. And the question was, could we find a way to underwrite and therefore risk transfer and to a degree risk manage a portion of the logistics chain in the delivery of vaccines in developing countries. So here's the context. This is pre-COVID, okay? Pre-COVID-19 vaccines. The context is the insurers can insure the pharmaceutical research process. They can insure the pharmaceutical production process. They can insure the logistics companies who come and pick up the vaccines in the refrigerated trucks. They can insure the transit in a shipping container on the high seas of those vaccines out to a port in, I'm making this up now, Malawi in Africa. But once it gets to about there, someone opens the container, the fridge goes off, and they take a box of vaccines out and they stick it on the back of a motorbike and they take it out to a clinic somewhere out in a village in the middle of the bush, as it were. And at that point, nobody knows whether those vaccines have remained cold, and therefore whether they remain effective when they go into the arm of a person, child, in the clinic in the village. So there's a humanitarian challenge here. There's also a business challenge. The business challenge is we can't underwrite that last portion of the journey, and so we're missing an opportunity to generate an underwriting profit on that portion. Obviously, it's underpinned by this humanitarian need to make sure that we've actually got an effective vaccine going into the arm of this person. And so we innovated an approach to this challenge with the Gates Foundation, who put a lot of money into vaccines, an organization called Gavi, who deal with the distribution of vaccines on global scale, particularly to developing countries, an IoT startup scale-up called Parcel, who had an IoT temperature sensor that could go in these units, and a few other organizations who came together to kind of co-innovate a solution. And I remember getting a text message from one of my colleagues who was in helping facilitate the innovation process, saying, wow, we've got it, we've just had the aha moment, we've just had the breakthrough moment, and there's an idea on the table that we can see. None of us would have individually come up with the idea, but together the collaboration developed an idea. Fast forward 9 months, that idea has now launched at Lloyd's of London as a new syndicate. It's called the Global Health Risk Facility. That now provides an underwriting mechanism for the underwriting of that last stage of the journey, so that we can afford to put that sensor in that box and therefore track the efficacy of the vaccine all the way through to clinic. And that Global Health Risk Facility, that innovation from last year, is now being used for the distribution of and the risk management and protection of COVID-19 vaccines to the world's poorest. So that's an example of why I love insurance innovation. It's a sector, insurance is a sector which makes such a huge difference to humanity. And innovation is a technique, is the best technique that we have as humanity for solving large problems. And so taking those two things together, a sector which is addressing many of the world's biggest problems, and a technique which gives us a toolkit for solving those problems, putting the two things together, that's what we love. And that's why that innovation from last year is my favorite from the last year. So microinsurance operates not just in Africa. No, there's some very big success stories in India, for example. I remember Richard Leftley, the CEO founder of MicroInsure, telling me how when they launched a new product in India, I forget the exact numbers, but it was, day one they sold 1 million policies. It was that kind of scale. And he told me how they were just opening up the servers and throwing new hard drives in as fast as they could to deal with the demand and the speed.
What did they sell?
I think it was digital. It was healthcare. These things are typically healthcare-based products or kind of clinical care type products. But the interesting one of our big bets for 2021, one of the ideas that we think is going to get some traction in the insurance sector this year, is the idea of taking some of the techniques from the microinsurance world in developing countries and take those techniques back into developed economies. So we call this digital microinsurance, and the thinking is very broadly this, that because of the distribution challenges and the economic conditions in the countries where microinsurance has been born and developed, the mechanisms to distribute and service those policies has been highly digitized and extremely efficient. So when you're selling a policy for a few cents a month, you can't afford for there to be any human contact. It has to be an extremely automated, very, very low touch, very straightforward process. And so the micro insurers have actually developed digital straight-through processing type capabilities, which are far more sophisticated and can run at far higher scale than any of the Western insurers are doing on their products, which are worth significantly more in premium terms. And so we see that just being a big opportunity for insurers in developed economies to learn from and take examples from and techniques from the micro insurers and deploy them in their world. And it may well be that this happens on quite kind of embedded insurance type policies. So I'm thinking, for example, of Zhong'an over in China. They've sold tens of billions, right, of policies, extraordinary volumes. They're all tiny policies sold often as an add-on to an online purchase. But it's that kind of thinking where we say, could we distribute billions of very small policies at scale through digital micro-insurance type techniques, but in Western and developed economies. So we think there's going to be some interesting traction on that this year, and we're starting to see the beginnings of that.
They're mind blown by the numbers. You're talking about multi-billion in terms of policies. That's incredible. And it's amazing that they understand that the overhead and the most expensive part of insurance, especially when we're dealing with micro or nano insurance, is the human being. If we can take that part out, especially for simple, very defined policies, that's something which is...
No, but you're onto it. That's the idea. That's the idea. Is we use the techniques that have been learned in developing economies to deploy these kind of mass but very, very tiny policies into developed economies. I think it's interesting. It's fascinating, and I think it's good to learn from. One of the things about innovation, a classic statement is necessity is the mother of invention. And so I'm a big fan of the concept of scarcity in innovation. Right? Every innovator wants as much budget and resource as possible to back their idea. But actually, it's when you're operating in a position of scarcity that you drive focus and you drive experimentation and you force your decisions to be data-led rather than just throwing money at the wall. And so the scarcity that has operated in these developing economies has created a set of innovations which actually outstrip the innovations that we've built in Western economies with much richer innovation budgets. And so it's that principle that's at work here, I think.
So from small numbers, which actually are very, very big in terms of scale, let's talk about big numbers that are a few maybe, not really sure. And that's the intangible assets. That's also one of the things that you were talking about or you mentioned within your reports. And it was very fascinating to me when you had a quote from John Neal, the CEO of Lloyd's, that is talking about that 40 years ago, only 83% of the S&P 500 companies, basically, their balance sheet was tangible assets. Now only 17% of the tangible assets are of their balance sheet is tangible assets. Where do we stand with that? What does it mean to insure intangible assets? Because we are talking about, in terms of value, of $21 trillion of intangible assets. How does it work?
Well, it's tough. It doesn't work very easily is the answer right now. But the point is that the balance has tipped from physical assets and offices and warehouses and factories and that kind of stuff, stock, to this intangible assets where it's about brand, it's about reputation, it's about IP. And these things, we can't wrap a P&C policy around them. And so, particularly in Lloyd's and in some of the more innovative specialty carriers, there is this focus on, right, how do we understand risk around intangibles, and how do we quantify it? How do we use the old mechanics that we were taught as kind of early stage underwriters and actuaries? How do we use those techniques to value this stuff and understand peril in an intangible world? And the answer, I'm afraid, is that in many cases it doesn't work. I'll give you one example. I've got a crazy idea that normal insurance exists to risk transfer the perils away from mainly physical assets, and that innovation as a methodology exists to take the risk away from, or transfer the risk away from, business models. Okay, so it deals with the perils associated with business models. Now, does that mean we could create an insurance policy for business model exploration? Could we insure innovation itself? All right. It's a crazy notion, but it's whenever I speak to anyone at anyone far smarter than me at Lloyd's, they tell me it's utterly impossible because it fails to understand the basic dynamics of risk and underwriting and insurance. And it does at the moment, but we need to rethink how some of this stuff comes together. Because fundamentally, as an innovator, whether if I use your examples of the Venice, the kind of the ship owners in Venice or at the Lloyd's Cafe, they were taking a risk. And so the underwriters covered that risk. As an innovator testing a new business model, and NINTEY's doing it all the time. We're an innovation business. We're always innovating new business models, and maybe we'll talk about things like Alchemy in a bit. But I'm taking a risk. There must be someone who'd be willing to underwrite that risk. At the moment, we call them venture capitalists, right?
I was just about to talk about Kerry and how it connects to Venice and the 20% that the ship captains used to take as part of the risk that they carry.
So there's this connection, and actually venture capitalists are being better underwriters of risk for entrepreneurs and for innovation than the insurers are. So anyway, innovation, I would say, and business model development and experimentation is an intangible thing that the insurance sector is struggling to get their head around. But similarly, the classic ones are IP, brand, reputation. Data is in there as well. Right? It's non-tactile. The cyber innovation has got closest to solving that problem. But you can extrapolate this intangible thing into other types of insurance. So in life insurance, what's the intangible, right? Because in life insurance, we're underwriting the fact that I'm alive, my heart is beating. But there's an intangible thing about my life, which is my memories. So how do I underwrite someone's memory and the happy memories?
How do you underwrite the spirit of a person?
Right. Well, that probably goes before. Yeah. Now you're blowing my mind. But you could dial it back. Our memories and happiness, that's a big intangible concept. But you could wind it back and say, my personal reputation, could that be underwritten? Right? If my business reputation can be underwritten, which is starting to become possible, how does my personal reputation get underwritten? What about my historic legacy? What are the intangible things that I value about my life and that you value about your life? And how do we create risk transfer and risk management products around that? And I appreciate this concept sounds far-fetched, but perhaps in 50 years, perhaps in 150 years, these things may exist and someone will have designed them. and so I'm curious about them.
Yeah, I think it's also a philosophical question that many people here in the US deal with it. I wouldn't say daily basis, but it comes up daily because it has a little bit political connection, and that's the pursuit of happiness, the American dream, the Western world dream. We all have that type of a dream of happiness. So that can be an interesting intangible thing that you may be able to underwrite because it will go hand in hand with freedom and other human rights basics and foundations. But it's a very interesting concept, especially when and it's connected to another thing that you guys are dealing with, which is sustainability.
No, well, sustainability. This is for me. This is the big one at the moment. So, um, for your listeners, at 90, because we are deeply curious about ideas in insurance around the world, we track them, right? So we look at the world's top 250 insurance businesses, and we look at what are they doing, what are they innovating, what are they launching. Yeah, a bunch of those are working with us on some of those ideas, so we have a privileged view of that too. But we run analysis, and once a year we publish a report called the Idea Pulse, which looks at these things. And we published that last in November, and in that we place a number of bets. Right? So if we were an insurer, we would place 5 bets for 2021. We've talked about a couple of them, right? Intangible assets is one of our 5 big bets. The digital microinsurance concept is another. But another, and I think one of the biggest ones for this year is sustainability and ESG. So this is not ESG and sustainability for the sake of CSR. Okay, so this is, just to be clear, this is not about...
Let me stop you for a second. ESG stands for environmental...
Yeah, sustainability and governance. So this is not about insurers innovating for the sake of their public image. Okay, this is not about them turning the lights off in their office at night, or switching the photocopiers off. This is about them finding ways to create socially responsible impact beyond their businesses. So an example of that would be thinking about the supply chain and thinking about what are the materials used in the supply chain and what are the conditions in the supply chain. If you're an organization, if you're let's say a personal lines carrier and you've got 5 million, 10 million motor customers, how can what you do with those 5 to 10 million help the way that they drive, or the vehicle choices or the fuel choices that they make be more sustainable? So it's thinking that way. It's thinking bigger about how can we increase our sustainable footprint on the world, or I guess the other way around, right? How can we decrease our footprint on the planet? And we've seen a huge rise in the amount of sustainable innovation from insurers and reinsurers over this last year. If I put this, I'll try and make this stark for you. Up until about June last year, in all the years of 90s trading, all the clients we work with, all the big insurers around the world, we had never had a sustainability initiative. Maybe apart from the vaccines one, which I referred to. In the summer of last year, suddenly, project after project was coming in with an ESG or a CSR, sustainability, climate change focus. And suddenly 40% of all the work we were doing was sustainability in focus. I can give you some examples without naming names, but these are all big global insurance businesses. So one was working with us to look at developing products for the renewable energy industry. Another was looking with us at using 100-year climate modeling, all right, so quite sophisticated climate models, to provide a new service to the construction industry. This is commercial P&C stuff, to the construction industry to help them plan the urban planners and large construction projects. Where are you going to site your project, and what is the 100-year risk from climate change to your project? Right, so starting to provide some risk engineering around climate. So that was another one. Another large reinsurer worked with us to. So this was looking at directors and officers liability product, and it was what we were innovating was, could we build into a D&O product now something that would protect directors and officers in the future from the climate and ESG consequences of decisions they take now? So almost an ethical type risk product. So we saw a lot of activity kicking off last summer, and that has continued. Ping An over in China, they talk about having more than 500 separate sustainable insurance products just in P&C, and then another whole bunch in life and health. There's some really, Zurich Insurance is doing some cool stuff in their risk engineering function has helped the group to deal with its climate risk, and has now turned that know-how into a climate risk engineering service that they're charging out to their clients. A lot of good examples of this that I could talk you through, but it's something that we're seeing a huge amount of pace on. I would say we're seeing more of this amongst the European insurers, continental European insurers. Think AXA, Allianz, Swiss Re, Zurich, Generali, Mapfre, than we are from the American carriers right now. But I have to believe that the American carriers will be following suit on this before too much longer.
And I will just give a quick shout out to Veronica Scotti from Swiss Re. And that's the way that I learned about the impact of sustainability.
Yeah. What the other, Gilad, for your listeners, 2 or 3 of my colleagues are actually on the verge, I think, of launching a white paper on this topic, right? Kind of sustainability and insurance, why it matters, and how you can use social innovation techniques to solve sustainability challenges in insurance. So any listeners who'd be interested in that, just visit the NINTEY.com site and you'll be able to download that for free.
Now, I would love to talk about, the Star Tree Recover Re, although it should have been a Recover, and the Black Swan Re, but I would more love to hear about what is the Alchemy and your partnership with Sabine and Ming, if you don't mind.
Yeah, of course. This is exciting. So Alchemy, or Alchemy Crew, is a new joint venture between NINTEY. I'm involved on behalf of NINTEY. Between Sabine van der Linden, who set up Startup Bootcamp InsurTech and Hartford's InsurTech Hub, and Min Tran, who is well known for his investment, kind of innovation investment and venture capital background and experience for people like AXA Next and so on. And we came together about a year ago, really recognizing the strengths that each of us could bring. NINTEY and its pedigree and capabilities around helping insurers solve innovation problems directly. Sabine with her strong understanding and pedigree in the venturing world and connecting powerful new ventures to insurer challenges. And then Min, who brings that investment experience and corporate venture capital understanding and ability to connect the chief investment officer's funds to innovation. And came together, we are the crew that sits behind Alchemy. And Alchemy's mission really is to de-risk venturing for insurers. And so that's up and running, and initial projects are underway. And a number of things that Alchemy does. Sabine is the managing partner there. The rest of us are co-founders and supporters in various ways. But
at its heart, there's a process called the reinvention engine, which takes a big insurance problem and goes out to the venture market and says, right, can we find a bold, brave new world venture that is mature enough to engage with a corporate and isn't just from the world of InsurTech, right? That may be from any tech line that you care to pick, that might come and work in partnership with, or take investment from, or be acquired by, or take insurance capacity from this incumbent in order to solve that particular business challenge. And so there's the reinvention engine process is a 4-month accelerated process, which goes about understanding the problem, scouting the world of reg tech and prop tech and every other tech you can think of, including InsurTech, but not just, looking for those perhaps more mature scale-ups rather than the early stage startups, and then connecting them back into a commercialization sprint. So, right, let's actually get the value of this venture connected into this incumbent's business problem. So that's Alchemy. It's working on some problems already with some carriers, at least one of which is in that sustainability space that we've spoken about. Yeah, so excited to see how that develops over time, and it's a pleasure to be working with Sabine and with Min. Great team.
Yeah, fantastic. Thank you very much for sharing. And now the question, because we don't have much time, and although I would love to continue digging and exploring all the different areas that you are working on, can you give me, or actually to the audience, because we do that every week, can you provide a book recommendation before we say goodbye and farewell?
Sure. Well, I'm going to be cheeky and recommend a book that I've not read, but that I know is a good book. So at NINTEY, we kind of run a little bit of a library. We buy in a bunch of innovation books, and our team reads them, and we give them out to clients and folk around the market just to keep developing thinking. And the book that I'd recommend to your listeners is called Beyond the Idea. Beyond the Idea. Subtitle: How to Execute Innovation in Any Organization. And this is a book I've given to a number of people. It's by 2 authors, Vijay Govindarajan and Chris Trimble. And I know that this has really helped a number of people in how they think about the portfolio of ideas that they manage and how they work them through the process. Often a convoluted process in a traditional, mainly BAU type organization. That's the world we inhabit, right? The incumbent space. So Beyond the Idea comes highly recommended, not just by me, but by everyone else who's read it.
Fantastic. Thank you very much. Dan, it's been a pleasure. Thank you for spending an hour, while recording. It will be 5 minutes to 30 minutes post-production time with me. Thank you.
It's been a pleasure. Thank you for the conversation, and take care.